Welcome, everybody, to the Table Rush Talk Show. I'm your host, Mischa Zvegintzov, and yes, I do have an amazing, shiny new haircut. If you'd like, you could go check out the Table Rush Talk Show on Spotify and see my handsome haircut. Anyway, today I have an insightful conversation with Pat Meegan, a master of monetization and managing director at Maple Street Advisors. Patrick has a strong background in Fortune 500 analytics, sales, and consulting. He is here to share his expertise on pricing strategies, subscription programs, and product strategy. In this episode, Pat reveals how aligning price with customer value can enhance both product appeal and profitability. Get ready to dive into the strategies that have reshaped technology, product pricing, and packaging. Let's get started. Pat, welcome to the show.
Yeah, great to be here. Thank you.
You know, you are going to bring a wealth of knowledge to us today. I can't wait to dive into subscription programs because that's so powerful. As Russell Brunson likes to say, if you don't have continuity, you don't have a business. And we would consider subscription programs continuity, correct?
Absolutely.
Yeah. And so, well, the most interesting I thought, because I have roots there, is that you're in Idaho Falls, Idaho.
Yep.
Yep. And so I grew up in Jackson Hole, Wyoming, and we were touching base on this a little bit beforehand and before we got started here. But I mean, first off, how does one end up in Idaho Falls, Idaho?
My wife's from the area. I'm from Colorado Springs. I was born in New Jersey, spent some time in the West growing up in Colorado Springs. But yeah, my wife's from here. So even though I lived all over the country, I ended up here a handful of years ago.
So is there, go ahead. Were you going to say something there? Yeah. So I guess my question is, is there a thriving, is it like a mini Silicon Valley going on over there? Because I know you deal with private equity.
Some of it in the Salt Lake City area, but in the current environment where a lot of tech companies are fully comfortable doing consulting engagements remotely, we have people in our firm all over the country. So it's a bit, we'll go on site sometimes, but for the most part, we're able to do a lot of this remotely and it works really well. So yeah, it's unrelated to where I work.
Okay. All right. Fantastic. I do love Idaho Falls. Loving Idaho Falls is a stretch. I do love the that part of the country. Quick favorite thing about Idaho Falls, and then we'll press on.
I think the summers are fantastic. They're short, but they really are fantastic, beautiful, and just moderate temperatures. It's a great place to be. Then you also get the winters. Lots of interesting stuff to do: skiing, snowboarding, snowmobiling. So if you can put up with the length of the winters and the intensity, you can get some fun out of the area.
Yeah, amazing. And are you going to Targhee to do your skiing at all?
No, I have done some there, but mostly there's a smaller resort near me in Kelly Canyon that we live right by, so I go there a lot.
Okay, and then of course you'll swing to perhaps Jackson once a year.
Yeah, the big ones occasionally. Yeah.
Yeah. All right. Well, fantastic. Let's press on. Let's start with, what are you doing over there at Maple Street Advisors?
Yeah. So here at Maple Street, we were recently made part of IGS. So that's a company that's been in the consulting space for a long time, but not in the pricing space. So what we do within the Maple Street team is we're pricing and go-to-market boutique consultancy. So what that means is, it's software, manufacturing, industrials, consumer products, business services. Those are the verticals that we work in mostly. And so we work through with senior leaders of a company, often when they have a hypothesis that there's some pricing opportunity or maybe haven't been actively managed and there isn't a clear strategy. Then we come in and help them develop that out and help them go from, generating the insights, creating the recommendations, and then working through an implementation. So we get deep in the implementation side because we're all about getting to that ROI.
And where are these companies in the stage of product, stage of funding, things like that? Is it all conception, or they're to market, or?
No, a lot of them are, it's a great question. So if you look across, we work mostly with PE-backed companies, often in the kind of middle market. That could range for software companies, could be 5 to hundreds of millions of dollars in ARR. Industrials, it could be billions. So a lot of the times it's that they've grown to a certain point and they've realized that their go-to-market strategy to get to the next stage of growth needs to be revamped or needs to be looked at closer. And so that next level requires some greater sophistication. We come and help them build that out.
Can you give me a couple of examples?
Sure. Yeah, I'll give you a range here. So it could be on the small side, VC backed company. Last year was $1 million. This year is 12, and they're realizing that, hey, we feel like we're leaving money on the table, but we're struggling to be able to articulate it to our customers to be able to actually price higher or change our structure. We went in there, generated a lot of insights based off of some research, some quantitative research with consumers. And this was a consumer case. Lots of ours are B2B. And then through those insights, we're able to say, hey, your hypothesis is true in that there is significant upside here in pricing. If you were to restructure it this way and then take it to market, you're going to deliver more margin and revenue. And here we are several months later, they're delivering the margin and revenue as promised. On the extreme other side, an industrial company could be $1 billion plus that we worked with, where they've been managing pricing tactically, but there's never backed up and said, okay, how should we price given where we are in the market? This is a market leader that wasn't really claiming some of the value they had in relation to other brands. So we went through and added some greater sophistication to their pricing method, did some willingness to pay studies that identified that they could price more aggressively, and went and rolled that out, and they've made significant amounts of profit and revenue off of it.
How are these companies finding you?
Yeah, a lot of times there's a network effect within the private equity and VC space, but also just going to maplestreet.com or IGS and talking with us. We get inbound leads based off of the buzz in the market a lot of the time as well.
And is it a hard sell, or I guess two questions, sales cycle on where someone goes, oh my gosh, you can help us. Let's go to market with this. And then, is it a hard sell, or do those questions make sense?
Yeah. No. So on the sales cycle and the hard sell, so there is no hard sell here because ultimately what we're trying to do is help them to deliver some of the results that they're chasing already. So if someone's looking to make it change, they're trying to drive some top line growth, trying to get some more bottom line coming out, increase the EBITDA and the valuation of their firm, often pricing is a huge lever. So that's why, we think about from a PE backed or VC backed perspective, this aligns a lot with what they're trying to do during that whole period of a company and generate additional value. Obviously, we've also worked with some privately funded bootstrapped organizations in there too. But ultimately, the sales cycle could be pretty quick. Teams already saying, hey, we need to do this. And we've heard about you and we're ready to go. Other times there's things that sometimes need to be in place first. Like, hey, we're revamping our entire sales team. And so we need somebody to execute this. Can't do it right now. So let's get this done first. Let's get the go-to-market changes first done, and then we'll come back and do the pricing. So, but yeah, we were talking a matter of weeks usually from the time we were introduced to the time we're ready to roll.
Cool. And then, yes, everybody listening, watching can go to maplestreet.com, and you can track along with us and get some insights on what Pat and Maple Street are up to. Thinking on the pricing side of things, as you're being introduced to these companies, it sounds like the big networking effect for you and Maple Street. And then as you're helping, I don't know if transform is the right word or help people.
Often, yes.
Yeah. Transform companies, that begets more people going, hey, I want to do that too. Right. Of course.
Yeah. Well, all the entrepreneurs know other entrepreneurs, on the like the bootstrap side, within the PE world, a lot of it's kind of a tightly knit group of people who are often moving between firms. And so who they've worked with in the past often becomes the basis for who they're typically going to talk with when an opportunity comes up. And then also just with good work comes momentum. People hear about it. So, you start to rise to the top of the list of people to talk with.
When it comes to pricing and how you're helping companies revamp their pricing, it sounds like, is it surprising the lack of intel or knowledge or even ignorance or on pricing and how to price and things like that? Can you dig into
Yeah.
that a little bit?
No, it's an important question. Yeah. So, I mean, first way I'd say is if someone thinks, if they have the hunch that they have a pricing opportunity, they most definitely have a pricing opportunity, right? So if it's not something that you have a clear strategy, you're feeling really confident about, you likely have something that could be addressed that could drive additional revenue and profit. But when you get into it, and the reason why a lot of this is you may have mountains of competitive information. You may have mountains of internal sales data. You might have a lot of customer NPS score and other satisfaction information, but being able to take that and then translate it to what does this mean in terms of, do we have additional pricing power? How should we position ourselves in the market relative to competitors? What are our differentiated aspects of our offerings that we can hang additional price on? And where do we have gaps? Potentially, we need to be building against so that we can have greater pricing power in the future. What are some of the tactics that we need to deploy? Just kind of the basics that maybe we're not doing right now, just because we're so busy running parts of the business that we're thinking about this.
Yeah. And when you're introduced to a company or someone expresses interest, tell me, how are you going deep with the company, or how does that process work? Can you walk me through that process?
Yeah. Yeah. So at the first introduction, one of the things that we'd like to go deep on is just that discovery conversation. This is one of my favorite parts of the process is, having seen hundreds of different companies and situations and worked on their pricing, we start to hunt for certain things. Okay, given the type of company, stage of growth, some of the things they mentioned early on, we're going to go deep in a few areas and start to try to ferret out where are the opportunities. And those are often really fun and really revealing conversations, because you can see that we're like, okay, we've seen some of this before. You seeing this, you seeing this. What about this? And you can start to bucket out some of the opportunities. But we spend a lot of time on that, just kind of really understanding what is it they're trying to accomplish, what are the challenges they're facing, what information they have currently, and then just kind of understanding the market and the solutions they have to say, okay, there are different segments here that need to be addressed differently. Is this something that's kind of monolithic, and are this super deep on their SKUs and it needs to be managed a different way, or could be, hey, we have tons of great data, but we don't know how to process it and use it, or hey, we have almost no data, but we need to generate some insight to be able to inform this. All of those start to frame up how we'd go about working with someone like that.
So you have a discovery call with someone, you start to go deep, you have this initial conversation, and someone says, yeah, yep, we get some insight that you can help. Then what do? You bring in team and you say, let us look at what?
Yeah. So there's a couple different ways. So do the discovery call. And then a lot of times, say it's an industrial company that has a lot of data. Sometimes we'll do a proof of concept where we'll take the data, ingest it into some of our tools, obviously after an NDA. And then we'll identify some opportunities and size the opportunities, right? So it's like, hey, looking at some of these analysis we do, we can see some clear areas of opportunity, and then we'll lay out a scope and say, here's how we'd go about it. This is the different tools we'd use. These are the things we plan to do as part of the work streams. It would typically be understanding the market, understanding the internal, and then doing some market studies. It could be consumer studies, could be buyer studies to understand their willingness to pay. And then typically a third work stream is about implementation and support. And so we would provide that kind of the SOW to them to the review, and then we get to kind of the final idea, and then they'll move forward with it.
Cool. And when this might be a strange question, but when do deposits start coming into place, or when do people start cutting checks in this whole process?
Yeah, we've done this a number of different ways. I mean, typically there's, as is typical with any consulting situations, there's usually some at the front and then at different phases, depending on how long it is. But it's usually phased out throughout the course of the project. And even though I described that data ingestion phase, a lot of times companies don't have that data, or it's not the right fit to pull that in as a proof of concept. So then you just kind of cut that phase out. We describe how we'd go about it and then move forward from there. But yeah, in terms of how it's built out, a lot of it's pretty typical fixed fee-based type work.
Okay. Can you go a little bit, and I'm not sure if you have permission to do this, and really what I'd love to hear more about is you say, hey, I've got a consumer case example where we brought a company from 1 million to 12 million revenue, or helped this company achieve that. Can you describe more of that company, or even say who that company is, or maybe talk a little bit more to what the product was to help give us a vision, a more succinct vision? Yeah.
Yeah. So in that case, I'll keep it somewhat generic, but still more tangible than I gave before. I mean, we're talking about, consumer SaaS offerings, or in this case, it was a shipping insurance product where, someone is going and buying a protection for their shipments they're buying from a company's website, and in which case, they're looking to protect their shipments so that if it's stolen or lost or damaged. And the question then is, okay, the way the market's developed, it's a product that's been around for some time, but there's very different ways to go to market. If you look at the competitive set, there's very different models there, and each company has kind of their own model. And so the opportunity there was, okay, within the model that they're going with, should it be changed? Determine it was a good model, but then there's a question of how to optimize it. I mean, it could deliver more within the range of acceptable willingness to pay.
Okay. And a little before and after. So before, this was how things were working, and this was the transformation we were able to have. Is that a reasonable question?
Yeah. So think of it this way: is going from like the 2 million to 12 million or whatever, it wasn't just because of the pricing. This was already a company that was ramping, but they were able to do it as soon as they made the changes. They were able to see incremental profit and revenue on top of their already aggressive growth trajectory. But you think about what they had before. So a lot of times, what you'll see in a company that's coming into the market, they're starting out with a model that often mimics where the leaders are, or it's something that's derivative of what's around them, or it could be totally unique. In this case, it was like, hey, this is what everybody else is doing to charge. And so, but there wasn't a lot of time spent on, okay, how could we optimize this? What should we do differently? Do we have a different capability set or differentiators that we can value as an incumbent now, that maybe at startup felt like we need to be a little bit more like the market? And so in this case, you say, okay, there are some differentiators here that are highly valued by buyers and by prospects. And so we need to be leveraging those more, and then also tuning up some of the mechanics of the program.
Awesome. I was given a list of potential topics to talk about before our interview started here, and one of them was strategic shifts, designing pricing around customer needs. Sounds like some of that was going on there. Maybe speak to that topic a little bit. Yeah.
Yeah. So if you think about it, I think at a fundamental level, anything you sell is going to be whatever that thing is, in terms of the number of that thing times the price that you price it at. There's an enormous amount of focus on the volume side, but there isn't that much focus on how much you price each one of the units at, right? So taking some of that mind share of the executive team and then kind of guiding them through that process is an important part of it. So there is an element of your strategy that's shifting when your pricing is part of it. And a lot of times where they're trying to take their strategy in terms of positioning, and where they're going in the market, oftentimes what we're doing is making their pricing live that positioning better, right? So you're trying to be a leader and you say you're a leader, but then you're pricing at a discount, or, you have a model that's archaic, compared to where the market is now. You're not behaving as a leader from a pricing packaging perspective. So, a lot of that really is saying, okay, what is your strategy? And how can your pricing model enable that strategy and also reflect it so that when someone goes to buy from you, it's clear that, these things of what you're saying about yourself and how you're pricing are aligned.
Yes. Thank you for that. When you're speaking to a client, like we're speaking in a lot of generalities right now. And when I say generalities, your consumer case example, although you got more specific, fairly general. I want to dive into the industrial company that was $1 billion plus, and perhaps we can go a little more granular on that. But are you, when you're conversing with a prospect or someone who you can help, or win-win for both sides, are you keeping it super general like this? And I guess my question is more of I'm not embedded in the space, so it might not be as impactful to me. But when you're communicating to
Mhm.
to someone who you can help, is this all resonating? Does that question make sense at all?
Yeah. And yeah, so what it comes down to ultimately is what can you do? There's usually a few buckets that are very tangible that you're getting into, right? So what do I do if I'm a software company? It's going to be, what can I do with my packaging? What can I do with my price metric and my pricing structure? What are the things I can do with my pricing levels or where the actual price is set? And there's going to be some pieces around contracting, like multi-year contracts or discounting policies or having a deal desk or those kind of things. So you're getting into things that are buckets that to them are the things they actually manage. So I've been talking at a level of that's kind of like the strategic, and then you click down and then say, okay, here are some of the actual pieces you're going to move around to improve it, right? And the only reason I'm not getting deep is because obviously these are, we have NDAs in place and companies we work with in depth, right? So, but the idea is the same in terms of, like you said before about building a pricing strategy around customer needs. That is fundamentally what drives the insights that you generate and then the solution you're going to build. So think about it from, you have to understand, where the willingness to pay is and where the opportunities for willingness to pay is. So for instance, if a company really thinks that they're super valuable on some aspect, and then we go out and we do some market research and find out they're actually middle of the road or below, which we've seen a number of times, then okay, that's going to be a limiter to your pricing power. So what do you need to do to actually improve your perception of the market and or change your offering to perform better in the market so that you can then claim greater pricing power? Or a lot of times someone really exceptional in the market and they're not claiming as much value as they actually delivered. So they're seen as a clear leader. They're really great. Some of the comments we get back from people who are buyers or prospects are saying, oh, these guys are fantastic. I think they actually could charge more. And we'll hear comments that are like right on the nose like that sometime. You're like, okay, this is really validating because everything we're hearing is that you're delivering more value than you're claiming through your pricing.
Fantastic. Thank you. I appreciate that. Thank you for framing it that way. Back to our industrial $1 billion plus company. Maybe give me a little bit more there, as much as you feel comfortable on
Sure.
before, after, and yeah.
Yeah. So this is the company that's a large player in the cutting space. And this is like cutting for forestry and things like that. And they have a number of products that are purchased by both consumers and by professionals. And it's a consumable, right? So it's, you think about like, you're going to use blades or different aspects of cutting. And so in this case, they had this is $1 billion plus company and it's a huge player in their space. So you're like, okay, well, this is mature. There's not a lot of opportunity. What ends up happening is this company had an enormous amount of information, wasn't leveraged effectively in the pricing space. There was no way to see how pricing was monitored. There wasn't an active view of what's happening competitively to pricing. Because think about this too. I mean, $1 billion, you're not just selling just in one channel. You're selling through a distributor network. You've got wholesalers, you got dealers, you got retailers, you have direct to consumer. So all those different channels, you got pricing there. And then if you started to look at it and we started to look at the competitive landscape, you got, you're priced here in this channel and over here, you're down a little bit. And in this other one, you're kind of all over the place. And then your competitors are too. So then what do you do in that case? So in this, there's kind of two phases. One is, how can we clean up the house? So if you've got hundreds of SKUs, and a bunch of different channels, part of it is just like, how can we just do a better job of having consistency internally? And we're actually living we probably have a set price that we want by channel. In this case, how do we create the structures and the visibility to manage that? So you're actually getting the pricing you intended at the different channels. And then there's the second part, which is, okay, but if this is where our price is currently, let's say on average, how much, could we take this up? Are we where we should be? Not just getting the house in order, but then could we get to a better place based on the value we have in the market? So often that's how we're thinking about is what are the processes just to be able to manage this effectively? Because there's a ton of profit to be squeezed out of a business just by doing a better job. For instance, you have a large customer and a small customer in terms of how much they're buying, and they're getting a similar price range for the products, right? And you're like, okay, well, why is this customer that's a great partner, been with you for years, buying enormous volumes, getting the same price that a small customer is getting that's buying transactionally and they're kind of just buying off the street. And you're basically providing no advantage to your loyal customers. And so a lot of times you'll really get the house in order and bring some more profit in while not affecting your churn or your demand at all.
It's so interesting. You said a couple of things. One, I think it's probably it would be surprising to a lot of us, maybe feet on the street individuals who are not embedded in looking at metrics of $1 billion companies. But I would think, hey, $1 billion company, everything's in line and they are maximizing everything. And if I heard you correctly, you basically said they didn't have key dashboards on how to manage this process or almost a lot of flying by the seat of your pants as much as you can be when you're generating $1 billion in revenue.
It's funny because companies tend to be really great in certain areas versus being great in every area, right? So if I think about that company, fantastic product company, fantastic at listening to their users, right? They do just a great job of building the best products, and that's why they are where they are. But often those that are super focused on the product, a lot of times their monetization strategy isn't as strong, and that's not universal, but a lot of times we see it. You think about it let's go back to like a startup, right? You have a founder who's a product person, right? And they are just super focused on creating the best product, versus, having, if you think about that startup, it eventually gets acquired by a PE firm. Oftentimes one of the first things they're looking at is saying, okay, how do we optimize their go-to-market? How do we optimize their pricing? Because they're usually focused on just getting that product market fit. And I think the product market price fit is something that tends to come a little bit later. It should be done as early as possible. Huge believer in that. If you're going to start a company, you should be thinking about what's the willingness to pay for this thing that I'm going to be creating. And there should be an ongoing effort. But oftentimes, pricing is kind of a niche thing that, it doesn't come through in the accounting reports. It doesn't come through in the marketing reports necessarily, but it should be an integral part.
It's funny. I'm going back to when I got my finance degree, basic economics classes in college where supply and demand charts and where this crosses here,
It's just supply tells you where it needs to be and demand just is what it is. And you're like, well, that denies any power of marketing, any power of product or of sales to be able to influence, the perception of value. And often, in a product that's complex, supply and demand is never going to give you the right price. You got to figure out where it is based off of the perception of value and the delivery of value of your offering.
It's so fascinating. I'm thinking on in what I do, I help people guest speak on podcasts and create offers and all this stuff in the online marketing space. And excuse me. And I can talk to somebody and I can hear quickly like, oh, if you did just this, and this, you could transform what you're doing in a conversation. And I'm thinking of you and what you do, and you're dealing with companies, as you said, anywhere from $1 million to multi-billion dollars, how you could perhaps have a conversation with a key person in $1 billion company and know within 10 minutes, like, oh my gosh, I could transform this part of your business or this revenue or this and have multi-million dollar impact, perhaps hundreds of millions of dollars of impact. Am I saying that right?
Yeah, absolutely. I mean, millions of dollars of impact every time. And we're talking about profit here, not just revenue, right? So when I go back to earlier, when I was saying about how fun the discovery calls are, that's exactly why. Is because we get in there and you start to identify, hey, I'm kind of taking some notes here. There's some big buckets of dollars here. And we just get excited about it because, we're passionate about our work and, we developed this really effective toolkit over the years, having gone through all these different projects. But it's really fun to start to identify, hey, you've got a huge opportunity here. We get excited. We'd love to dive in and help you really realize that.
That's awesome. I'm just thinking it must be so fun what you do. You get to have those conversations and you're just almost frothing or, you're salivating like, oh my God, how I could help.
Yep. Well, and the reality is like anything, right? So you come into it, these are smart people who've been running the company. So even though you identify where the buckets are, the challenge really is to then go and chase it down and turn it into, the real value delivered. So between the time that excitement period, then you dive in and do the project, there's a lot of kind of wading through and understanding the current situation. It usually isn't just a matter of just, hey, flip a switch and, someone was asleep at the wheel. It's because there's different ways that has to be extracted out, and there's complexities, and there's different customers, and there's nuances and reasons why a company did something and why they're doing it the way they are currently. And then having to navigate some of that and then boil it down to, okay, what are the biggest buckets we can focus on now? What are the things later that you should be focused on? And then who needs to do what so that this can be sustained? A lot of that comes through a lot of just, grinding through the work and getting there. So it's like you have the really fun excitement where you identify the buckets and you go through and just do the hard work to get there. And then you have the fun on the other side when you start to deliver it. But it's like, that's really what kind of drives us as pricing people is getting to that great outcome for the client.
Yeah, I'm imagining you have a conversation with somebody and you're able to shine a light fairly quickly on, hey, here's revenue opportunities, profitability opportunities, even new product opportunities, perhaps even taking something from a one-off product to, hey, you could do this as a continuity model or a subscription model. You're having some of those conversations.
Absolutely.
Yep.
Yeah.
Where was I going with this? I'm imagining reasons why a CEO or a GM or a VP, I'm imagining these are the people that you're having these conversations with. Yep.
Yeah, it's typically head of sales, your CEO, sometimes finance person's involved, but it's usually head of sales or CEO involved.
So I'm imagining two reasons why someone shrugs you off or is like, yeah, this all sounds great, but I'm thinking one is you spoke to that work part, that heavy lifting, like, hey, there's all this massive opportunity right here. And I know it's going to be frustrating, but look at what we can realistically deliver on the other side. Do you have a lot of people that go, yeah, it's just, I don't want to do the heavy lifting, or I don't want to commit to that, or I don't want to give you access to that information or those people or those resources? Does that question make sense?
Yeah, that's a good question. So rarely is it the last one where it's access, because, obviously with non-disclosure agreements and things like that, data sharing, that's usually not the barrier. What usually is say they decide to do something internally, or there isn't budget, or someone internally didn't prioritize it. Because here's the thing about a pricing project, and the same is true largely with go-to-market projects we're working on the sales enablement side, is that this is something where you have a clear ROI, right? You're going to take the price up and you're going to see a gain in revenue and profit. And so often it's a question of priority. It's a priority that is a big one. And then should we do it internally, or should we have an external resource come and help us? And so often what happens is teams will go and take a shot at it and then come back later and say, hey, we tried it. I think we were partially effective. Can you come in and help us kind of get over the finish line and then kind of review what we've done and finalize it? Sometimes that'll happen, but ultimately, I mean, if someone knows they have a pricing opportunity, they can usually realize part of it internally, but it's really how much of it do you want to be able to realize, so there's also pitfalls too. So for instance, there are cases where we've been brought in where someone's like, yeah, we knew we had a pricing opportunity. So we took everyone's prices up, by X percent. I think I heard one recently, it was like 40%. And then we had a huge drop off in demand. And like, okay, well, then that's where, like, to your point earlier, that's where we start to ask questions like, well, how did you do it? And how did you treat people differently? Was it all the same? Did you treat every channel or every product the same? Everybody was 40%. And if so, how did that go? Where are you hearing the feedback? What are the concerns they had? Have you looked at some of the data? Is some of that drop off in certain channels, or is it everywhere? All that kind of stuff. We're kind of drilling down into understanding the picture. And then you can kind of say, okay, I can see where you went wrong here. Because usually the biggest risk that we see when teams go and do it themselves is to take an oversimplified approach, or they just not having seen dozens and dozens and hundreds of these projects. There's some things that work and some things that don't, that often, it's the first time you do anything, it could be potentially rough, but also potentially partway successful as well.
Mm-hmm. How often you're having these conversations you're shining a light on again the profitability impact you can have, the new product opportunities, the subscription opportunities, the revenue opportunities. How often are these really smart, driven individuals out thinking it, and perhaps I'm thinking that's the other reason that would stop somebody from taking action on something like this. They I hate to say it, but maybe their ego gets in the way, or they outthink it. Or does that question make sense?
Yeah. Yeah. I think often, people say, I founded the company, I set the pricing. I think we can change the pricing or whatever. It's like, yeah, of course you can. And that's how most companies end up doing it. I think the question is, if you've done this across hundreds of companies, you've seen a lot of the ways that it can be done well and poorly, you can get a whole lot more. And especially when you're talking about, this is an ROI type of a thing. Like, it's not something where you're just going to, you're going to invest and you're going to see an immediate effect in the market. You're going to see an immediate return once it's executed. And so it's one of those where how much of a multiplier of your efforts do you want to have, and maximizing that is typically higher with an expert.
Yeah. How many intro calls or discovery calls or first contact calls are you having a day, month, week?
Yeah, a week, typically a handful. I mean, it's kind of averages often out to one a day. We're talking to people all the time. And of course, it's different stages of development. Sometimes we've talked with people who are, thinking about it, and we have a conversation with them. 6 months later, we have another conversation with them. And then kind of the organization's ready. A year later, they're ready to go, and we roll with them. Others, far more often, there's a major initiative. They know they need some help in pricing. And so they're talking to us, and, they're ready to roll in a matter of weeks or months. And then we just make it fun. But yeah, very frequently talking to folks.
This is going to be a strange question, but it's just coming to me, so I'm going to ask it.
Okay.
What's a fail look like? Like, someone engages you guys as a company, and you're working through it, but it fails. What's that look like?
So first, it doesn't happen often, but usually what happens is there's some other piece in the market that so if you think about it from, in some cases, there have been times where a competitor made a significant move, or a follower, like let's say we worked with the follower, and what we recommended had to be modified. And so it wasn't that it failed; it was more that things aren't the same as how it had been designed. So let's go back and redesign it. So usually it's that case where we come back and say, okay, and this is something where we've been, reach out to us via email. We just hop back on and say, okay, what's going on? What's the current situation? Okay, this is information that didn't exist at the time. Let's go back and kind of tune it in. And we've had those calls, here and there over the years. But, usually it's that, something changed from when we were working with them.
Mm. That's a great answer. Thank you. Are you saying no to companies, or who are you saying no to?
Yeah, there's some different segments that we don't. Yeah, like for instance, oil distribution, like oil and gas. Like we've worked on a number of different things in oil and gas. Pipelines or different kinds of products that are related to it, industrial that serve oil and gas. But we don't do a lot of oil and gas or major defense contractors and things like that. We don't do that. So we pretty much stay in our space because, as you get more and more reps and you have years and years of experience there, it's like, you know what you're doing, and you stay in our lane that way. And there are others who, when it comes up and it's like, man, we don't do that. We just pass on those that are kind of either, giant, organizations, just because we're geared to the middle market.
Awesome. What's your continuity look like? Or I'm visualizing you, helping companies implement these strategies, these ideas, these pricing models. And then is it 2 years of follow up where you're monitoring, or what's that look like?
Yeah. So we typically do a check-in within the first 3 months after an implementation. But usually we're part of the implementation. So for instance, they're rolling out, they're getting all the materials together for their sales team to go and take it to market. And so, just yesterday I had some calls with some folks who last summer we worked with, and they're kind of doing a check-in and saying, okay, here's some things we're seeing. The organization isn't quite where we wanted to be in terms of rolling it out. So we started talking through, okay, what are you doing? What are some of the things that they're having? It's kind of like more organizational inertia challenges. Everything that they were rolling out was working, but they could roll it out faster and make more money. And so that was a question of like, how can we get there faster? So we can talk through some of that strategy. So often it's, a few months later, we're checking in. And then we usually check in, around a year, just kind of say how are things are going and engage that way.
Mm. How much revenue have you been involved with? I'm not sure if that question makes sense, but I want people to have
like sum the client's revenue up.
Yeah.
Gosh, I haven't done the math on that, but I probably should. But it's, in the industrial space, we're easily in the multiple billions. But in the technology space, we're also in the billions. So, and professional services as a standalone, we're at least a good way toward at least getting toward $1 billion there as well.
That's amazing. How does one fall into this, get into this? Clearly, you're a master at your craft and what you do. So, how does this happen?
It's funny, if you talk to people who are in pricing, the paths are almost all different. I was early in my career was in finance, then got into sales and just really liked that combination between the financial and the sales. And that's where pricing really is part of that. And just have always had a fascination with insights and, understanding the data, being able to identify areas of opportunity, just like driven to optimize is kind of my personality. But and I think people a lot of times who get into the pricing discipline, I know there are very few educational programs that cover it in colleges, but usually they're coming from either a product or a sales or a finance side, and they have kind of the toolkit it takes. And then they start to just kind of fall in love with that space of pricing and start to fit in there. But typically as someone who's pretty analytical and has worked on that sales or marketing side.
When did you know you were good at this? Like, what was the moment you're like, man, like this is my happy place and I am good at it?
One time years ago, I was working, we were trying to pitch a product. It was at one of the major US retailers. And I remember going back and forth with the sales team. I was working in like the headquarters team for, baby care product. And I was working with the sales team and they were kind of pushing back and saying, hey, I don't think this is the right way to go. And I'm like, look, I really think this is the way to go. Like, look at the data. It's going to make sense. Okay, Pat, we're going to put this on the shelf and see how it goes. And they came back, it wasn't too much longer. And they're like, we're going to call that the Pat Pack because it's delivered $1 million already. And we're really happy with how it's delivered. And I was like, it was just like really fun to see that. That was one of many experiences kind of where I started to say, I love this pricing and this pricing and product strategy stuff.
And are people pushing you that way? I'm not sure if that question makes sense. Where it's like,
I had a VP that was really perceptive, and he was like, hey, there's certain things on the team that we need, and we're going to float people to things, but where they're brilliant. And he's like, I'm going to push you in this direction because I think you're really good at it. Right? So that was super helpful for me too, to say this external perspective was insightful for me to say, I didn't even realize that other people, saw this in me. And at that point in my career, 10, 12 years ago was really, really impactful for me to have that mentioned.
Mm. Did you start Maple Street or?
No, Russell and Tim were our founding partners. So I'm one of the other partners and now I'm a managing director now that we're part of IGS, but, which is a recent, the last couple of months. But yeah, so I run the pricing teams and, Russell and Tim founded the company, a handful of years ago.
Are they old friends and they're like, you'd be great here, or a headhunter found you, or how
So a lot of them came from another firm, and then I knew one of the partners, and they knew I was in the pricing space as well, so brought me in a while back.
Was that an easy decision to go to them from where you were, or was it? Yeah, go ahead.
It was because there's something about client work that's just super interesting, right? You're diving in, you're understanding a situation, you're collaborating with a team that knows their business really deeply. I spent a lot of years in the corporate world, and this was a very kind of different approach, just because it was being able to use a lot of those skills But then also you see being able to look across a lot of the projects is something that's been super valuable. And it's something that I knew would be great as I got into consulting, because I'd done some, on the side for years, but at smaller scale. And then just moving into this has been really cool because it's, bigger scale, bigger impact, and just has been really an awesome experience.
That's cool. Are you, I was in tech sales for a bit back in the 2000s, early 2000s, late 90s, early 2000s.
Uh-huh.
And we had what were called sales engineers. So I was selling data co-location back in the day, or what are server farms now, call it
Uh-huh.
whatever you want. But we would bring in the sales engineer, right? So I was out there, biz dev, you know, cold calling, getting the opportunities, painting the picture, and then bringing in the sales engineer who could say what could really be done. Are you sort of that sales engineer type of a guy, or are you?
Yeah. So, I mean, I'm
Yeah, go
involved in
ahead.
a lot of the sales calls. So it's an interesting position. So, for a good chunk of the week, I'm working with Russell and Tim, and we're having conversations with prospects. And then also in all the projects that we're doing, I'm involved in all of them. And so I'm able to kind of talk from the experience where, like, we're in this specific situation before, we've seen this. So of course of the year, just involved in all of the operations. So, since we're a boutique, we don't just have the partners sell and then walk away. We're part of the actual solution. So you're getting the people who are, part of the, down in the weeds, and all the way up into the recommendations and implementation that they're talking to, versus handing it off to a junior person to take care of.
Yeah. And so IGS acquires you or brings you into the fold. What's that like, and benefits of that? Or
Yeah, it's a really smart move. So if you think about it, Investor Group Services, IGS, they do a lot of diligence work. When a PE firm is looking to buy or sell, they'll go and do, the analysis, review all of the trends related to it, the insights around the company themselves, their performance, their customer feedback, voice of customer, all that kind of stuff. But then they identify there's a pricing opportunity, which often they do, or a go-to-market opportunity, which often they do. This allows them to say, hey, we can also provide this service where they go and work with us on the pricing or go-to-market side to realize that benefit. So it kind of ties that inspection, if you will, to the ability to remediate the opportunity. So it makes a lot of sense from a portfolio value creation. If a PE firm's working with IGS to do the diligence, then they can also work with IGS to make the improvements that are identified.
I think I want to. Well, I know we're hitting the wall on time here, but I want to make sure to talk about subscription programs and the power in
Mm-hmm.
in a subscription program. But I also want to ask you the biggest opportunities that you see in the marketplace right now. And I'm imagining it's got something to do with subscription programs, or
Yeah, I mean, so even if someone has the subscription program, there's often a question of optimizing that. So, for instance, there's a lot of AI products that are coming into the market, or they're being added to existing products, and how those are monetized is important. Data monetization is something that people are talking about all the time. I think what no one ever regrets is time spent designing and redesigning and improving their pricing strategy. And so, even if it's been successful, if you aren't looking at it frequently, and especially in a technology space, there is pricing innovation that happens, and there's things that, if you're on this license model, and maybe there's an argument for a usage-based model or a hybrid between some things, maybe the packaging could be more effective than just going out at, everything's a la carte, or everything's all access. The range of those options. There's a saying once I saw that there's only two ways to make money. It's bundling and unbundling. And so there's usually some aspect of that comes into it is should be aggregating more, or should be pulling things apart. And usually if you look at the maturity curve of a company, they're going to be doing bundling and unbundling of their assets as they build them and as they grow.
if I was going to start a business right now, I'd start a
Subscription technology. Yeah. I think that there are so many opportunities to solve problems for companies. I think it's sort of B2B technology.
Mm. Can you give me another minute on that or go a little bit deeper or what's?
I don't have the specific idea of what I do, but I'd say it would be, so if I think about this, it'd probably be somewhere in the space of enabling insight into companies' data or into their sales processes. There's, as we look at, it's just fascinating to me as I watch sellers on sales recordings and I watch companies, while we have tons of technology, there are still a lot of gaps and soft spots in how companies operate. And I think there's more improvement to be made there.
Mm, thank you for that. How are you guys working AI into all of this?
Yeah, so we use AI, a number of AI tools within our work processes that allow us to gain greater insights, to be more efficient from an operations perspective. From a client service perspective, we've done a number of AI-based pricing projects where we're helping them to price AI, and AI is different than kind of just typical cloud computing. It has different costs, it has different risks, different advantages. But the fundamentals of understanding how do people perceive this value, consume this value, and then what are the different model options to then monetize it? A lot of the underpinnings aren't unique in the AI space, but it does deserve its own time and attention. I think sometimes we've seen this a number of times where it's like, yeah, we have an AI product, we bring it out, and it isn't claiming as much value as it actually could, given what it does for the product, for the user.
I'm thinking that a lot of things that were happening, tools that you were utilizing, processes you'd created, tools, things like that, were already in play, and now people are calling them AI, right? It's like, oh no, we're just rebranding it almost. A little hypey around all that. Would you agree, disagree, or?
Yeah, I mean, you think about it, go back to in the consumer product space, 10, 12 years ago, where everything became green, and a lot of it was like, hey, this is a product that was like a piece of tissue paper, and now it's green because, whatever. But some of that positioning happens, but at the same time, the challenge really is, how does it change the outcomes for the buyer? And you don't get the credit for the hype, you get the credit for driving the outcomes. And so that's where those who really have AI that's beneficial can stand out versus those who are just kind of claiming it.
Awesome. Again, everybody, maplestreet.com, maplestreet.com. Pat, this has been a ton of fun. Real quick before we hit stop, is there anything that I hit stop? Inevitably, somebody goes, oh, I wished I'd have said or talked about this or highlighted this. Anything coming to mind?
No, I think I just repeat the comment you made earlier, which is if you think you have pricing opportunities, you do have pricing opportunities. And take the time to put some mind share toward it and work on it, because it's going to pay off.
Amazing. Pat, this has been a ton of fun. Thank you. I'm going to let you get back to your day, and I'll hit stop and we'll say a quick goodbye offline. Thank you for listening to this episode of the Table Rush Talk Show. For resources to help you sell your stuff, go to belove.media/resources. That's belove.media/resources. And be sure to subscribe, comment, 5-star, and share. Thank you again for listening.